MACD is currently a very popular indicator, and MACD is a very successful indicator. Easy to use and works for every market. The most important thing is that it's the most successful indicator that we can use for free and make money. You probably already have MACD, you probably know about the indicator, and you've probably used it. Sometimes you may think that it is a failed indicator, as you don't know how to use the MACD indicator properly. Today in this video, I will teach you how to use the MACD indicator properly. You watch this video and use the MACD indicator in your trade in this way, you can increase your trade success rate to 99%. And what will happen to the remaining 1%? I will tell you the reason at the end of the video. Okay, let's first add the MACD indicator to our chart. So what you have to do is to click the indicators icon on the platform you are using and search for MACD. Now click this top one. Now we have added the MACD indicator to our chart. The MACD indicator is made up of 4 different components: the MACD line, the zero line, the signal line, and the histogram. The MACD line, which is the blue line, in most cases is usually a 12-day moving average. The signal line, which is the orange line, is usually a 26-day moving average. Next, we have the histogram, which represents the difference between the MACD line and the signal line. The smaller the space between the two lines, the smaller the histogram gets. The bigger the space, the bigger it gets. You can also see, once the MACD line crosses above the signal line, the histogram turns green, and if the MACD line crosses below the signal line, it turns red. Let's make sure we know how to use them. The MACD indicator is insanely good at finding trends and markets. Tell if a chart is about to have an upward trend is by looking for a cross upwards between the MACD line and the signal line. For example, here the MACD crosses above the signal line, indicating the chart is in an upward momentum. And here the MACD crosses below the signal line, indicating it's in a downward momentum. You can also use the histogram to indicate how much momentum there actually is. So if the histogram is getting bigger, that means there is an increase in momentum. It's getting smaller, there's a decrease in momentum. So how you actually want to use this indicator is by when the line crosses upwards, but only if they cross below the zero line. If they cross and it's above the zero line, you wouldn't want to enter the trade. It's the same concept with shorting. You only want to enter a short trade if the lines are crossing downward and it's above the zero line. But if you use it like this, it won't work. The most common mistake is to use only the MACD indicator to easily enter the trade. I will now teach you how to make the MACD indicator more successful. Why this doesn't work. The MACD indicator works extremely well if the market is in a trend. So for example here, the MACD indicator is doing a great job indicating when the price is about to move upward, because the chart is in an upward trend, but here the price is in a downward trend, but the MACD is still signaling to buy long, even though the price is going down. A simple fix to this issue, for example, if we're trading long, we only want to trade if the market is in an uptrend. You never want to trade against the trend because the odds will always be against you. So an easy way to figure out if the market is in an uptrend, you simply just need to add a 200-day moving average. To do this, you're going to go to the Indicators tab on TradingView and type in EMA, which stands for Exponential Moving Manvia. Click the top one. Then you're going to go here, click the settings of the EMA. You're going to go to Inputs and change the length to 200, which is going to make it a 200 exponential moving average. Once we have the EMA indicator added, you'll see just a single line. If the price is above that line, the market is in an uptrend. If the price is below that line, the market is in a downtrend. So after learning that we only want to trade in an uptrend market if we're going long, so all we have to do is put it all together. We buy if the MACD line crosses below the zero line mark, and the current price also is above the 200-day moving average. If you wanted it short, you would do the exact opposite. So make sure the price is below the 200-day moving average, and the MACD lines are crossing downward above the zero line. So as an example, we would want to enter a long trade right here, because the MACD lines are crossing upwards below the zero line, and the current price is above the 200-day moving average. Now what I like to do is set a stop loss below the 200-day moving average. The 200-day almost acts as a wall that the price has to break through to hit the stop loss. Then I like to have a 1.5 profit ratio for my profit target mark. So as you can see for this example, the strategy worked exactly as we wanted it to, and we made money. Okay guys, that's exactly how the MACD indicator is used. As I said earlier, if this is 90% successful, what happened to the remaining 1%? Trading is not something that always succeeds. The market changes quickly for different reasons, so any indicator can fail at any time. Okay guys, I will end today's video here. If you have any problem, comment below and ask.